We're about to stream live. You're waiting on YouTube. All right, we're live. So Wall Street sizing up. You have found the channel. This is stock market news today for March 4th. This is bite-sized, quick hit stock market news for the geeks, the traders, the misfits that you probably won't find on CNBC. And when I say probably, I mean probably. I go through newsletters. I go through, I get about 5 newsletters a day, so it's always fun to run them. But all right, let's hit the markets. Markets were down today, as you see on the screen. The S&P finished down 51. That's almost a point and a half. NASDAQ was down 219, almost 2 points. And the Dow Jones was down 346, almost just over a point, right? At one point, it was down 700. So that's a problem. You can see that here. These guys are, what's going on here? It says the United States major stock markets closed on Thursday after plummeting over the Federal Reserve Chairman Jay Powell. His remarks. He failed to convey reassuring comments that investors were hoping for, and instead said there is no plan to raise interest rates until labor market conditions are consistent with maximum employment and inflation is sustainable at 2%, which is really their charter, right? So nothing new there. I did want to point out this though, is that like this just hit. If I could find it. Oh, where is it on the news? Well, anyway, it's right here. All right, so SpaceX, they're under investigation. So Elon Musk's aerospace company SpaceX gives a strong response in a court filing on Thursday, condemning the subpoena from the Department of Justice. The DOJ is investigating SpaceX for discriminatory staff hiring. But here's the thing, it was just one person. So SpaceX draws the line at IERs, that's Immigrant and Employee Rights Unit, overreaching attempt to bootstrap that lone frivolous charge into a wide-ranging and expanding pattern of practice investigations the agency is now pursuing. Essentially, it's one person, right? There's dual citizenship, and then he didn't get the job, but he lives in the U.S., and so it's real vague, but it's one guy. So again, government regulations. We live in Texas. Sometimes we need them, but most of the time we do not, and that's why we like living here. So all right, let's get started. Big day today for Jack Dorsey and Square. That's right. Square, the payments company founded by Twitter CEO Jack Dorsey, will acquire a majority stake in Tidal, the audio streaming service founded by musician Jay-Z and some other musicians, for about $297 million in cash in stock, the company's announced today. Tidal will remain a part of Square, while Tidal will remain separate part of Square, while Jay-Z will join Square's board. Existing artist shareholders in the Tidal business will remain stakeholders. It comes down to one simple idea, guys. Find new ways for artists to support their work, said Jack Dorsey in a statement. All right. We've been saying it for months, and you will be able to see it on the screen. It's there on the screen now, but let me explain what you're looking at. Cathie Wood and ARK and her ARK ETFs, right? So ARKK, her flagship ETF, is down 5% on the year. It was up 26% literally less than 2 weeks ago. One of these newsletters that I read kind of alerted me to it. Then over the past, not this week, but 2 weeks ago, I started seeing tweets, and it just keeps getting bigger and bigger and bigger. The Bear Cave, which is the newsletter, so you can Google it and look it up, reiterated liquidity concerns about ARK Invest. Cathie Wood said, "We love a wall of worry. We saw it on social media, which I have too. A lot of chatter. Some of it's just waiting for our funds, in particular, to take a tumble. Maybe to buy, some happy to sell, short, and all that. ARK's illiquid holdings are problematic because as ARK faces redemptions, hedge funds could take predatory short positions in ARK's illiquid holdings and create a performance death spiral. That is the worst case, right? In a YouTube video last Friday, Cathie Wood essentially said this. Find it. she addressed the illiquidity concerns and said there is a misunderstanding of illiquidity when it comes to ETFs. As a portfolio manager, I know the difference between an ETF wrapper and a mutual fund wrapper. A portfolio manager in the ETF does not need to worry about flows. So you can see on the screen here where my cursor is. So this is the volume of all of her ARK ETFs. It's exploding. I'm a big fan of Cathie Wood. Do not get me wrong. I love Cathie Wood. She is my leader in stocks for sure. But you got to start reading between the tea leaves here. So here's the first thing. So the volume is going up. She was down about 3 to 5% today. One time I looked, it was 5. One time I looked, it was 1. So here's the thing. ARK Invest sends out these daily emails to investors with its ETF trading trading activity, right? The trades they've made, the buys and the sells both. On Friday, February 22nd, ARK Invest expanded its disclaimer to 718 words compared to Thursday's 163 words. And you can see it on the screen here. So it went from this to this. Why? Right? And so, again, I can point to several places on Twitter, and you have some, squawking on CNBC. I'm a big fan of Cathie, but I could see how this could drive definitely the share price down, right? Certainly we don't want a death spiral, because the issue is, and I saw this on Reddit too, which with 3,000 likes, is the retail investor is going to get screwed here, right? I don't think it's going to happen. I hope it does not happen. I pray it doesn't happen, but it is a possibility, as many things are in the financial world. All right, let's talk about Melvin Capital real quick. So he was down. Melvin Capital made 21%, almost 22% in February, after losing 53% in January due to the Gamestop short squeeze and the gamma squeeze as well. So there's Melvin, founder there. That's pretty amazing that he's bounced back like that. I've got a funny feeling that that the bailout money helped from Steve Cohen and his buddy and Citadel, but I have a strong opinion that he somehow got out of the trade, probably when Robinhood stopped trading. At least you couldn't buy it. He gets out. He then switches sides. I believe that the stock did go, it went down the next day, and then the following day it went back up, and now it's, I wish I had my trading view up. But anyway, it is definitely, I think it was up today as well too. So, all right, new ETF. We have the Buzz ETF tracking, as we reported yesterday. The Van Eck Buzz ETF, which allocates stock in the fund by tracking social media sentiments, launched this morning. The ETF has been promoted heavily by Dave Portnoy of Barstool Sports fame. I don't know what his actual role in the ETF is. I'm guessing that I need to read more, but he's certainly a part of it in some way. The new ETF will select 75 stocks most popular on social media platforms and combine them into a single ETF. Here's the platforms: Twitter, Yahoo Finance, Bazinga, Reddit. I believe they're going to have a Facebook, but it did not say that in this article here. It's going to be put through a natural language processing algorithm to predict the online community sentiment towards the stock. There used to be a startup called Hedge Chatter that did exactly this, and I remember the founder moved down to Miami and it kind of went away, but they had a sentiment meter as well, and it was pretty cool. It actually worked, and this is literally 7 years ago. They really had something there, and they probably didn't know what they had. Okay, Baron Capital, a major backer. I don't know if I have this one on here or not. Yeah, Baron Capital. So this is a major bull of Tesla, has sold 1.8 million shares in the company since February. Despite saying the price will hit $2,000. Again, Sells are a little different. This one being a major sell makes you think, but I would think that if he's saying the 2000, he's probably talking his book. You would think he is. I know, again, Cathie Wood's a big backer of that. All right, let's talk Okta. I guess that's the way you say it. It's the way I've said it all. It's like identity management company announced plans to acquire Auth0 for $6.5 billion. It's a massive bet. The valuation of the stock transaction represents nearly 22% of Okta's valuation. So they're buying them for about 22% of what their entire valuation is. So it's crazy. Well, an IPO was an option for Okta, says the board member Dave Cowan. The duo ultimately decided the companies were better off together. Shares are down as the company announced it would be acquiring Auth0. The deal is pure stock transaction, diluting the float by 21%, and that is probably why it is down. I don't know if I have this next one. I don't believe that I do. I don't. Arizona House, because it's a big story. I just couldn't find a really good. I mean, I've got the bill, but Arizona House of Representatives has passed a bill, 31 to 29, that would mandate companies like Apple and Google to allow app developers to use their own payment systems and avoid the 30% revenue share. The bill, which was introduced on February 10th, will now be passed on to the Arizona Senate, where it's expected to pass, and then it goes to the governor. And clearly he can veto it. So, but this is a big deal. It would set some, it's not a court precedent, right? But it would set a precedent against big tech. Specific, both Apple and Google Apple earned like $36 billion from its app store last year. And I want to say, so Google earned $36 billion. Apple earned like double that, like $78 billion. According to the bill, app developers and users based out of Arizona should not be required to use a particular in-app payment system to purchase a digital product or subscription. So they're just letting them get around that 30%. Now, I would say that is unfair to Apple and Google, as much as I dislike how big they are and how they could exert a lot of pressure and throw money at a lot of things that they want to happen. They created the App Store, and app developers know going in, we're going to have to pay 30%. So our margins are going to have to be, our gross margins are going to have to be phenomenal, like close to like 90 to 80%. So, going in. All right, BlackRock Capital. This is the capital now. Announced its earnings for Q4. A $7.3 million and a dividend earning of 10 cents a share, a 28% decrease from the same period of last year in 2019. Its revenue of $14 million decreased by 23%, and it missed estimates of $15.8 million. Again, this is BlackRock Capital, so not the $1 trillion BlackRock. At least that's how I understand it, because the price, I didn't read the whole article here, but the price is only about $5. I would think the BlackRock big boys, but fact check me, please. So, all right, before I get to this one, I've got Cruise, a self-driving auto producer owned by GM, is reporting in talks to acquire Voyage, which operates autonomous taxis in retirement communities. I think this would be big. This is going to set up competition for a lot, essentially Tesla and Waymo. So, all right, let's talk about Charles Schwab. Brokerage and financial advisor Charles Schwab is exploring how it could and can offer crypto trading to its customers through a partnership with a crypto firm. According to three sources familiar with the situation, the financial services firm, which holds $6.8 trillion in customer assets, is said to be in discussions with several crypto firms. Well, we know they'll probably go with probably one of the three biggest. You got Coinbase, you got Gemini. What is that third one? What do you think? I'll leave that up for discussion. All right. It's closed up on me. All right. So it is in commodities, oil, copper, and aluminum market, for example. When demand is higher than supply for a long period of time, it's called a super cycle. We all know that. I wish I had a chart for you. Rising commodity prices are leading analytics to predict that we could be in for another super cycle in a couple of commodities, certainly in rare earth. But according to JP Morgan, commodity investments have dropped to the lowest portion of investors' portfolios in more than a decade. If investors were to allocate a larger portion of their portfolio to commodities, prices could continue to rise. And I think that's what's going to happen. You've got oil that's at $60 a barrel. It's probably going to 70. You've got copper that needs to come out of the ground. You've got all rare earth, right? I mean, it's a semiconductor shortage right now. All right, institutional investor. I wanted to show you this. All right, this is the SPACs. It's not on my. All right, so this is about SPACs. Like, do SPACs really pay off, right? So I read this article I found through a newsletter. Right, it says when is the best time to get in SPACs and when to get out of SPACs, right? When to de-SPAC is what they said. So this study spanned 114 SPACs, but it was between January 2012 and September of 2020. So there was a rush at the end, but that's a little long, right? While investors so this is what they found. Investors in common shares lost 4% to 15% in the first year of the merger. So remember that. That's what we're seeing now play out in the SPACs from literally November to February, right? Especially now in this choppy market. Depending on weighted methods, warrant holders fared surprisingly better. If you own the warrants, the average 1-year buy and hold return of the merged company warrants is 44%. So you want to get the warrants. Period. Full stop. That's it. So you buy. So essentially, what they said is, you buy the hype of the blank check company, of the SPAC, before they actually announce something. Because if they announce something that the market doesn't like, boom, it's just going to fall, right? And I think we've seen that in quite a bit. So all right, I say I don't get on CNBC, but here's another one. Market bull who predicted herd immunity by Independence Day. Maybe we weren't optimistic enough. So this is chief equity strategist. He is with Federated Hermes. He told CNBC's Trading Nation, here's what he said. Thinks with 3 vaccines available now in the U.S., the investor believes that the economy will recover significantly faster than expected. And you can't say he's wrong. You really can't. And I think we all hope that's the case. So there you go. All right, some science news, because we're all about science here. Science discovers massive space hurricanes above Earth. Space hurricanes are similar to regular hurricanes, except that they occur at a much higher altitude and rain electrons instead of water. Did not know that. Very cool. This is on Vice.com. You can find it there. They can stretch across like 1,000 kilometers above Earth. They've seen them all over. The first one they spotted like in 2014, I think is what this says. Many more space hurricanes have been discovered since 2014, and they are likely a universal phenomenon occurring at other planets and their moons as well. It's pretty cool. Pretty cool stuff there. All right. I've got Singapore Sea, SEA, the Southeast Asia leading super app. Its value has increased 7x in the past year to $130 billion, and now it's creating a $1 billion investment fund. That's pretty cool. All right, here's my crypto news today. We're talking about the Dogecoin. Dogecoin was I saw this and I had to go check this myself because I didn't know that the market cap has gotten this big. So you can see it here, how the run-up is just ridiculous. Thanks to Elon for sure. Dogecoin was created as a joke in 2013. We all know that. Invented by software engineers Billy Marcus and Jackson Palmer, the crypto who hold, I believe they still hold at least 2 of the 3 biggest wallets. I could be fact-check me on that, but that's what I've heard. The cryptocurrency was based on a dog from the Doge meme. So this is what I saw. The market cap of this joke coin was less than 100 million. So back in 2017, it did go up some, But at the end of 2020, really the March of 2020, it was like a tenth of a cent. It rose to like a third of a cent. I think this is what's on here. Yeah, a third of a cent, right? And now it's exploded. It's now worth what's the market cap? 6.5 bills. That is crazy. Let me make sure that's 6.3 billion dollars is what this. As one South African entrepreneur has repeatedly posted Doge memes on his Twitter account, he posted this and I just couldn't believe it. So anyway, guys, that's the news. I appreciate you guys. Hey, this is Wall Street Sizing Up, the stock market news today for March 4th. We appreciate you. We have one sponsor, that sponsor StockTrade.tips. They have one goal, to help you profit off the insider knowledge of the hedge funds. They do it through SMS. They send you an SMS text of the ticker if they believe that hedge fund position is still in the money and could still increase. So with that said, guys, cheers. Really appreciate you guys. Watch your six go hard in the paint. We'll see you. Thanks.